Hey guys, welcome to Investify, where we help you grow your wealth through smart investments. Today, we will talk about Warren Buffett explaining how to invest in the upcoming recession to become a millionaire in your life. Let's get started. In today's economic landscape, it may seem as if you, as investors, are trapped in a cycle of hopelessness, unable to recognize the remarkable opportunities that lay before them. However, Warren Buffett, one of the most renowned investors of our time, offers invaluable insights on how to become a millionaire even during an impending recession. His wisdom and strategies stand as a guiding light for those willing to seize the moment. Understanding the fear of a recession. 2 decades have passed since the infamous dot-com bubble burst, and a decade and a half since the harrowing mortgage crisis of 2008. Yet, many of you today find yourself on the precipice of yet another financial catastrophe, gripped by the chilling whispers of an impending recession. This situation raises fundamental questions about human psychology and the persistent flaws in investor judgment. Warren Buffett has a simple message for you in such trying times. Don't be paralyzed by the past traumas. Instead, recognize the gleam of recovery on the horizon. History has shown us that missed opportunities often lead to significant losses, as many investors fail to capitalize on the market's upswing in the recent years. Consider this year alone. The Russell 2000, an underdog among U.S. equity indices, has shown remarkable gains. Meanwhile, the NASDQ, a stalwart in the tech sector, has witnessed a staggering 40% rise. However, a cloud of skepticism looms over these gains. Many investors believe that we are in the midst of a treacherous AI bubble, driven primarily by a few dominant stocks. They argue that the true narrative lies in the likes of the Dow and Russell, hinting at a looming downturn for the NASDQ and S&P 500. Their concerns are fueled by the rising specter of 10-year U.S. Treasury note yields and the perceived threats of inflation. Challenging the fear of inflation. Warren Buffett's wisdom challenges the prevalent fear of inflation. While you are understandably concerned about inflation, recent data suggests that this apprehension, especially concerning inflation rates, may be misplaced. In most stable countries, we operate in a world defined by nominal values. These values take inflation into account, and historical data indicates that inflation itself does not necessarily harm stock prices. The real threat arises from drastic measures that central banks might take in response to inflation. If the federal funds rate fails to keep pace with rising inflation and suddenly spikes, stock prices may indeed suffer. On the flip side, when inflation slows and the federal funds rate decreases in response, stock prices often surge. In this context, inflation can be seen as a silver lining for investors. It typically favors riskier assets. Companies like Microsoft, which have pricing power, can keep increasing their prices while potentially maintaining stable salaries for their employees. This pricing power and cost control can lead to an increase in earnings and, by extension, stock prices. For companies with significant debt, like Intel, the scenario is even more favorable. Debt obligations are fixed and aren't subject to inflationary changes. If a company's revenue increases due to inflation while its debt service cost remains unchanged, the company can pay off its debt more rapidly, which can enhance its balance sheet and, in turn, boost its stock price. Before we continue, remember to show your support by giving this video a big thumbs up, subscribing to our channel, and hitting the notification bell to stay updated with our latest content. The path forward. Navigating the reflation cycle. In these uncertain economic times, you as investors need a strategic approach to both optimize profits and mitigate risks. The key is to navigate the reflation cycle, which could mark the onset of a prolonged bullish phase in stocks. Number 1. Determine the dominant trend. Start by deciding on the overarching trend direction you anticipate. In this case, we predict it to be upward, referred to as the dominant trend. Consider allocating investments to grid major stock indices through standard ETFs, leveraged ETFs, or futures and options based on your risk tolerance. Number 2. Strategize for market dips. When the market goes against the dominant trend, employ inverse strategies to capitalize on downturns. You can achieve this through various instruments such as inverse ETFs, leveraged inverse ETFs, futures, or options. Number 3. Capitalize on countertrend exhaustion. When you sense that the opposite trend is waning, liquidate your countertrend assets and reinvest the profits into assets aligned with the dominant trend. Number 4. Liquidate at peak. Once the market reaches a significant high, divest all assets aligned with the dominant trend. The timing and risk factors are at your discretion. Hedging, as advised by Warren Buffett, offers numerous advantages. It allows for profit maximization, risk mitigation, and capital liberation. However, it should be approached judiciously to ensure you have the necessary reserves to weather potential financial storms. In conclusion, Warren Buffett's wisdom offers hope to you as investors, guiding you through the complexities of the current economic landscape and paving the way for you to achieve millionaire status, even in the face of an impending recession. By understanding the psychology of fear, challenging preconceived notions about inflation, and embracing a strategic approach to the reflation cycle, you, as investors, can work toward the goal of becoming millionaires. As history has repeatedly demonstrated, opportunities often present themselves when they are least expected. And Warren Buffett's insights are here to help you seize those opportunities on your path to financial success. Now, we thank you for joining us on this enlightening journey through Warren Buffett's insights on investing during a recession. Now it's your turn to share your thoughts and insights. Have you encountered any specific challenges or opportunities in your investment journey related to economic downturns or market conditions? What strategies have you found most effective? And do you have any questions or comments about the content we've discussed today? We value your input and would love to hear from you in the comment section below. Your experiences and ideas can be invaluable not only to us but also to the fellow investors who are part of the Investify community. So please don't hesitate to share your insights and engage in a conversation with us and your fellow viewers. Well, that's it for today. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.